Hey everybody, it's Eric with Low VA Rates. As you can tell, it's another amazing, beautiful Friday. I'm wearing red. I hope you are too. Speaking of red, there's a red button down there to your right that says subscribe or follow or something like that. Just hit that button so that you can get access to all these videos the moment we go live. Today we're going to talk about student loan debt, okay? I'm going to put that up here. I like to use my whiteboard. Student debt, okay? Student debt and how that affects your ability to get a VA loan. Now, having student loan debt doesn't automatically disqualify you, but it is going to play a role in whether or not you get approved, especially here at Low VA Rates. And we're working with students all the time, so we are experts on this. Now, the first thing you got to realize is the status of your student loans will affect your, we've talked about this, DTI. That's your debt to income ratio. Okay, I want to talk about active repayment. If you're currently in active repayment, or that period where you're making payments on your student debt or your student loans, then those payments are going to be included in this DTI calculation. They're going to be. But let's say you're in deferment. Hopefully you know what deferment means. Deferment is when you basically don't have to make your payments for a certain period of time. And if you're in deferment for at least 12 months, okay, or more, if you're in, I can never remember if there's 2 F's in deferment or 1. I'm going to just put like that. See, we go live here. 12 months deferment. You know what I'm talking about. If you're deferred for at least 12 months or more, then we will not include your future payments in your DTI calculation. Okay? But let's say you've been in deferment for 24 months and you've got 3 months left on that. So even though you're not making payments right now, you're still deferred, but within the next 3 months, you're going to have to start making payments. We're going to have to count your payments in the DTI. So the key there is how many months left of deferment. 12 or more, don't have to count them. Now let's talk about forbearance. We've heard a lot about forbearance lately because of COVID and all of the forbearance laws for mortgages, but let's talk about student debt. If your student debt is in forbearance, that is different than deferment, okay? Any of your student loans that are in forbearance are going to be calculated in the DTI, okay? So if you're in forbearance, put that up there. If you're in forbearance, then yes, we're going to count those payments in your DTI. Deferment, no. Forbearance, yes. So let's say you've got some student loans and you want to request deferment on those loans because you're trying to qualify for a home loan sometime in the future. Here's what you have to do. You know, and the only reason you would ask for deferment is, like I explained, you don't want those loan payments on your student debt to be counted in your DTI. There's only specific situations that are going to qualify you for deferment. The first one is active duty, okay? If you are on active duty, you can request deferment. The second reason that you might be capable of getting approved for loan deferment on your student debt is if you're currently enrolled in college or some sort of vocational school. You're going to have to be a part-time student or more. If you're just taking a couple credit hours a month, that's not going to work. But if you're a full-time student or a part-time student, you could also apply for deferment. We're just going to put active, okay, if you're an active student. Now, choosing to defer your loans isn't always the best decision, especially if you can still qualify for your VA loan, even with those student loans being calculated in your DTI. Okay, so let's say you don't want to go into deferment, or you've applied for deferment and it gets denied. You still want to get your VA loan. You still have student loans. How do you qualify for a VA loan with student loans being part of your debt to income ratio? I mean, the easy answer is just make enough money, right? But we like to get a bit more detailed here at Low VA Rates. One of the things you can try to do is you can get an income-driven repayment plan from the student loan provider. So basically, what happens here is your monthly student loan payments are adjusted to accommodate for your current income level and your family size. So it's not like they just go away, but they may reduce them because of the life situation you're in right now. Usually this means that your monthly repayment amount is going to be lowered than it was under the original plan. You, however, have to request your income-driven repayment plan from the servicer of your student loans. So whoever you're making payments to, we've talked about servicers before, whoever you're mailing your student loan payments into each month, that's your servicer, and you would request this income-driven plan from them. Another thing you can do, I love this, reduce your debt, okay? Might sound simple, isn't always simple, but as you're preparing to get approved for a VA loan, you know you've already tried to get your student loan payments deferred or lowered. The next thing you want to do, look at your debt. Bring your debt down. Pay off a credit card completely. Maybe transfer the balances to a credit card with lower rate. We've talked about how to lower your debt in many of our other videos. It's a good way to help when getting approved for a VA loan with student loans. Okay, for example, you know, if you have a car loan that's almost paid off, maybe you can go round up some money just to pay the whole thing off early with a one lump sum payment. I know that's not simple, but it's an idea of how you can lower your debt to income ratio. Now, you're also going to make sure that you keep the amount you charge on your credit cards going forward as low as possible. Let's say you want to buy a house in the next 3 or 4 months. You might want to move as much as you can into cash as opposed to buying your groceries and paying your utilities on your credit card. And basically what you're trying to do is you're trying to bring that debt to income ratio down because you know you've got these student loans. Now, when a lender, like low VA rates, is calculating your student loan payments that we're going to include in your debt to income ratio, it's done in one of 3 ways. So I'm going to write these 3 ways down. What does low VA rates or any other VA lender do when they're trying to calculate your student loan payments? If they need to be calculated. Number 1, if your loans are currently being deferred, like I talked about originally, but they will start being paid within the next 12 months. A lot of times in your credit report, we don't see a payment. We don't know if you're going to be paying $500 a month or $1,000 a month. So what we have to do is we have to estimate your payment, okay? So estimate. We have to estimate your payment, and we do that by taking the total loan amount. Let's say you have a $15,000 loan with, you know, some student loan company. We take the total loan amount, okay, and we divide that loan amount by 5%. I take that back. We take the total loan amount and we multiply it by 5%, okay? And then we divide that by 12 months. So, for example, let's say you've got a $10,000 student loan that's in deferment right now, but the payments are going to be coming due. If I take the $10,000 in student debt and multiply it by 5%, I come up with $500. Then you divide 500 by 12 and you get, I might have some rounding errors off here. It might have some pennies or some decimal points there, but let's just call it $41 a month. Check my math. I hope I did it right on the fly here. $41 a month is what the underwriter is going to use to calculate your debt to income ratio on deferred student loan debt that's coming due within the next 12 months. Now let's talk about if you're currently making payments, okay? But they aren't fixed by any sort of amortization schedule. That doesn't happen often, but it does happen. We see all sorts of curveballs here. What your lender's going to have to do at this point is they're going to use the higher of either this formula that I just explained, right? Or whatever's being reported on your credit report. And if it's a variable payment and it goes back and forth every month, we're just going to look at whatever's on the credit report and whatever's calculated here on the estimate. Whichever one's higher, we're going to err on the side of higher payments, and we're going to use that for your DTI calculation. Now, lastly, if you're currently making fixed amortized payments on your student loan, then it's simple. That's what we're going to look at. So if your credit report, you've been making student loan payments for the last 2 years, and it's $100 a month, then we're going to use the $100 a month to calculate your debt to income ratio. Okay, now in addition to your debt to income ratio, student loan debts are also going to affect your residual income. We've got lots of videos out there on residual income, so make sure you watch those. And as long as your residual income is still within that threshold that we talk about in all of our videos, then you're going to be able to qualify even with active student loan payments. Now, if you're not familiar with residual income, like I said, go to our YouTube channel, type in residual income right in the search bar on our channel. You're going to find all sorts of informative videos and other information out there. So look, here's the deal. In today's world, student loans are fairly common. Many of our borrowers have them. They don't have to hold you back from getting a VA loan. Call us. When all else fails, pick up the phone and call us or chat with us live on our website. We'll help you out. We love our military borrowers who have gotten a great education or are still getting an education. We want you to get into a home or qualify for that refinance. Thanks for watching. Make sure if you're not wearing red right now, go change your shirt, put on a red hat. Do something to show you love our veterans as much as we do. We'll see you next week for another Red Friday video.